Groupe Dynamite has issued its third quarter earnings report, the clothing retailer's first quarterly results since its initial public offering just last month on the TSX. Stifel initiated coverage a few days ago with a buy and a price target of $27.50. We're joined now by Martin Landry, Managing Director of Equity Research at Stifel. Martin, thanks very much for coming on the show.
Good afternoon, Andrew. Thanks for having me.
Looks like the same-store sales growth was pretty good in the latest quarter, north of 10%.
Indeed, Groupe Dynamite has momentum right now. One of its brands especially is catching our attention, which is Garage. As you know, they've got two brands, Dynamite and Garage. Garage caters to a younger audience, the Gen Zs. And that's one that has a specific positioning with an edgy look and sexy styles, and it's resonating. And as you mentioned, the company's same-store sales were up 10.1%. Double digits in retail is extremely good, so they're gaining share.
It's pretty amazing as well. So Andrew Lufty, now the CEO, joined way back in 1982 as an 18-year-old as a stock clerk. So yeah, there is, you can work your way up from the mailroom.
Andrew is a successful entrepreneur. He's everything he's touched has turned into gold. So I think that's a reflection, you know, given that Dynamite's the only IPO we've had in Canada this year. It's a testament of his business acumen, and we've got a lot of confidence in him and his entire team.
Can you give us a rough idea how much of their sales are in the States now and how much in Canada?
The growth's going to be mostly in the U.S. Right now, I don't have the exact number, but it's probably close to 50-50, and maybe a little less than 50-50, 40-60.
Sure.
And the growth engine of the company is going to be the Garage brand, and it's mostly going to be in the U.S. When we looked at Garage, we see a long runway of growth. We think the company generates in the U.S. Probably $400 million of sales. And when you compare that to other companies like Aritzia, that generates $1.3 billion of sales in the U.S., or Abercrombie at $2 billion, you can see that there's a potential for a long runway for the brand in side of the border.
One thing that interested me was that apparently they achieve very rapid turnover, something like 8 times in a year. How do they, and that way they've less risk of a fashion faux pas, I guess. If they mess something up, it's out of the store soon enough. How do they achieve that rapid turnover, though?
Yes, it is a metric that caught our attention as well. You know, for the last 12 months, their inventory turnover was 6 times. So that means they have 60 days of inventory, of sales in inventory. And it compares to the average at around 90 days. So, you know, very low inventory levels, low markdowns, better brand perceived value in front of the customer, and better margins. That's another thing that we can talk about. Their EBITDA margins are extremely high. And how, to answer your question, how they get to operate with such low inventory levels, they have a really rapid development cycle. Some of these, their fabric, some of these products make it to the shelves within, you know, within 8 weeks. They keep a pretty high open to buy into the season, meaning they can adjust to trends and reduce like, as you said, the fashion risk.
Now, during COVID, they did file for protection, but they emerged from that okay?
Yeah, they did. You know, a lot of retailers did file for protection. It's not an anomaly. But one thing that is important is that most of those low price leases are behind us. So I don't expect a big increase in lease costs on a go-forward basis.
It's interesting as well, the technology. Talk to us a bit about the use of technology in the company.
Yeah, they have an RFID technology, a 2.0 RFID technology. which allows them to monitor the real-time, the inventory in the store. Clerks can find the piece of fabric or the piece of apparel they're looking for using that technology. They ship from the store online, and they also have mobile point of sale to speed up the checkout process. So it is a use of a lot of technology in place to smooth the transition process.
That's interesting. Speeding up the checkout. That's a personal peeve I have, making me line up to pay you money. I have been known to walk out of stores. I guess I'm a type A personality. I don't know. Leave us with a final thought. One of the risk factors that you point out here are these Asian cut price sellers, particularly Shein, the fast fashion vendor. So there is competition, new competition for apparel retailers.
Yeah, no doubt. Look, we're talking about fashion. Fashion comes and goes. Right now, Garage and Dynamite are popular with customers. Maybe at some point that changes. Maybe somebody else has got a popular influencer. And like you said, Shein and Temu are major players, big players in this space with a lot of followers. It's nothing new. Dynamite has been dealing with these competitors already. But investors got to keep in mind that we're talking about fashion and it comes and goes.